Absolute Wealth. Real investors, real results.
Hey everybody, this is John Carter for Absolute Wealth, and let's go ahead and take a look at the market. So this has been an interesting market to say the least. I have been talking about the surprise move in this market being to the upside, mostly because the news has been so ugly. And my experience when the news is so ugly, you've got to be very, very careful about getting aggressively short, especially when you can see here in early June we made this low in stocks, and since then the news has actually gotten worse. For example, here JP Morgan lost $2 billion, and over here they reportedly lost like $9 billion, and they made a higher low, meaning that their low here was higher, and this is for the market, than the market here. Okay, that's a bullish divergence. And now it's kind of coming home to roost, and you can see we got that big explosion day here, sideways day, and then today it was on Tuesday, July 3rd, the market was just kind of lightly higher, but the path of least resistance has changed. Now the question might be, it's like, gosh, John, we were down here at the lower end of the range, and now we're at the upper end of the range, so there's probably not much more upside here, right? That's when you've got to step back and look at the weekly chart. So the weekly chart here, you can see that upside range is up here at around 1410, okay? But the monthly chart here is, oh, check this out, Henry. You see what's on the monthly chart on the S&P monthly?
Nice little one dot.
So we've got a squeeze setting up here. Now the last one dot squeeze we had here led to a huge decline. I mean, that was kind of like the financial crisis of 2008. When that happened, you can see momentum was heading lower. This time, actually, momentum's higher. And then the last big squeeze was back here in '01. Monthly squeezes happen once every couple of years. The good news is this means that, and I don't know how long the squeeze is going to last, but it means that some huge movement is coming to the stock market, which is great. Okay, so overall, at this point, just beware. Just you got to kind of keep a handle on the bad news. Yes, it's bad. At some point, I do think the markets are going to have a big decline. I just don't think we're ready yet, okay? Let's take a look at a couple of other markets. For GLD, gold has had a nice push, okay? And you can just kind of see here it's at the upper bands. At this point, I'm actually I'm bullish on gold because we're talking about quantitative easing. But honestly, at this point right now, you can see that there is a lot of resistance here, okay? A lot of resistance here. This was support around the 158 level on the gold contract. I think this is around 1650, 1700 or something like that. But on GLD, it's right in here. You can see we're getting close to that level. So for GLD, I think the jury's still out. I just think gold still needs a rest before it has this next major move. However, the fact that they're talking about essentially quantitative easing is bullish for gold. Okay, so that's what we got. Main thing here I just want you to focus on is just the news is going to tell you things are bad. You're going to expect stocks to go down, but continue looking for them to go higher. Okay, and the last thing on the stock market is that I'm finally very excited about Apple. This is a stock I've not been excited about for some time. This is a phenomenal setup here, and it shows that Apple is back, and if we can break through 600 and have Apple as a leader, then shorts are going to get killed, which means stocks go higher. Okay, hope that helps. You guys have a fantastic 4th of July, and we'll see you at the next update.